Hi, this is Rahim Zulfikar Ali, and this is my another video on financial modeling in Excel. And today in this video we will learn about applying base rule in our financial models. Base rule is an acronym, and base rule can help you to summarize any account. Cash is the king of the business, and the base rule can be used in any account, but I will illustrate its usage in cash account today. Please note that cash is a balance sheet item and sits in the current account section of the balance sheet. The full form of this base is the B for beginning, A for additions, S for subtractions, and E for ending. And the ending of last year is the beginning of this year or the current year. Let's discuss about some of the cash inflows and outflows transactions, like invested in plant worth USD 30 millions. So its impact on cash will be it's an outflow of USD 30 million. Similarly, for the third transaction that sold goods for USD 120 million, the impact on cash would be this is the inflow of USD 120 million. So we will be trying to make or set our financial model on base rule and some impact of inflows and outflows of cash. So with this example we have some assumptions, like cash assumption that we have some starting cash in the fiscal year of 2009, and then inflows and outflows as related to the transactions pertained during that year. Accumulate some amount here, and in cash flow statement we have just linked up all the sales with each other. How I did it, that's very simple. Let's see the example for the fiscal year 12 and 13. In 2013, the beginning of cash flow statement amount is the last year ending of ending value, and then I have added some additions of inflows of cash and subtracted outflows of the cash from the cash flow statement, and I got the ending value for 2013 with the sum function. Okay, and in this example you can see that the fiscal year 11 ending value is the opening of fiscal year 2012, and we have just discussed about that how we can create this base rule in our cash flow statement while we're creating some of the financial models. And here we have just linked the cells with each other, like the additions of cash flow statements is coming from the links of cash assumptions inflows row, and outflows from the outflows row. We don't have to put numbers here manually. We generate our financial models on based on links of the cells, so we don't have to put every time individual amount each of the title of accounts. And I have applied some function at the ending value that sum the beginning amount, add additions in it and less subtraction, and gives me the ending balance, which will be the opening balance of the next year. So this is how we can create a base rule in our financial models. And where else this function can be used in finance is like we can create that is the beginning old retained earnings plus we can add net profit after tax and minus dividends. That will be the ending of a new retained earnings. Or we can create this base rule in depreciation also, like the old cumulative depreciation plus the adding the depreciation during the year, and then subtracting depreciation because of old sold assets, and that will give us an amount of new cumulative depreciation. So we can create this base rule, or we can apply this base rule on different financial conditions in our financial models. So base rule is one of the key aspect of getting your financial models standard in Microsoft Excel, so that you can work efficiently and more effectively and give you the proper results in a less time. Thank you.